The biggest money in the world, then again, is taking money off of COMEX, and they've been doing it. We've been talking about this a lot, you and I, since 2020. It was interesting to me in 2020. Now it's very illuminating. I mean, bottom line, you're seeing the most sophisticated private investors in the world take huge amounts off of COMEX. You put it all together, and I think you see a pattern where big money is de-dollarizing, and where there are many, many potentials to open the floodgates to some of these inflated assets in search of, or leaving these assets in search of a safe place to put it.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs. Welcome back to Liberty and Finance. This is your host, Dunnigan Kaiser, and we're with Andy Schectman, the CEO of Miles Franklin Precious Metals, for a weekly market update. This is Tuesday, May 25th, 2021. Andy, thanks for coming back on.
Always great to see you, Dunnigan. Hope you're doing well.
Yes, thank you. And I see you're not sitting on the cardboard boxes piled to the rafters there, so you're settling into your new location, which is awesome to see your new office.
Thank you. It's coming along. Next week, it'll even be better. So it's... I still have the extension cords running, and I got some stuff I have to sidestep around, but it's coming. We've been living in chaos since February, basically, so I'm kind of used to it by now, but it's getting better, that's for sure.
Yeah, I think without extension cords and duct tape and things like that, where would we be? I remember from my previous career as an engineer, other even more senior engineers, the generation older than me, saying that they wouldn't trust any blueprints that they didn't have coffee stains on them, because they figured those are real people worked on those. So
yeah, absolutely. I got calluses too, for real.
That counts.
Yeah. Right.
We wanted your insight on what's going on this week in the precious metals markets, the broader economy, and specifically the supply and demand supply chain as you see it from inside the operations of a bullion dealership, so that our viewers who are contemplating the next move they should make can have that as additional insight in making their next move decision. So what can you tell us about the most important factors that you're seeing playing out, or you're expecting to play out soon?
Look, I look at the money creation numbers. Money creation's up 75% year over year. You're talking, that's just extraordinary. Normally it's 2, 3, 4, 5%, not 75% year over year. And what does that manifest itself into? They talk about inflation being characterized by rising prices, more money chasing fewer goods, and as a result, you get higher prices. Well, if you are doing anything in terms of building a home or remodeling a home or adding furniture or adding any appliances, you will really quickly realize that we're seeing inflation in that industry. There's no question about it. But I think we're going to start to see rising inflation start to spread more broadly. And I'm really convinced that that's going to happen. And I think you're also kind of beginning to see it, so to speak, at least in terms of price inflation in this industry. You take a look at the Silver Eagles and the Gold Eagles, and they're at the highest premiums I've ever seen in my career, and getting them is next to impossible. The Type 2s just came out. We're able to now start taking pre-orders on them as of yesterday. They won't come out until July. But if I had to guess, the U.S. Mint will be the model of inefficiency for the rest of the year. If I had to guess, getting anything silver or gold out of the U.S. Mint will be really difficult, by and large, for the public for the next year. You're seeing more people chasing fewer ounces, and the U.S. Mint has been shut down really for the better part of the last month and a half. I have seen virtually nothing coming out of there, identified by these huge premiums on the Type 1 silver and gold Eagles. And so when I look at the broader economy, I see money creation. I see an economy that is sliding along. And if I had to characterize it, I would say we are on the precipice of potential hyperstagflation. That's what I'm really concerned about before this is all said and done. When people really start to realize that perhaps we've started to slide down that inflationary rabbit hole, and they try to spend their money to buy things, to sell overvalued assets like stocks, like bonds, like real estate, like cryptocurrencies, and look for a place to put it. There are very few places, really, where you can find anything that isn't inflated, except silver. And it's a mystery why it's been able to tread at these levels for such a long period of time when everything else around it in the commodity complex and really in the financial universe is skimming on all-time highs. So I think this is really important for people to understand. When you look around and you see massive money creation, when you see inflation starting to rear its head in most or many of the commodities, when you see all-time highs in asset classes, and characterized also with an awakening, so to speak, by a good number of people into precious metals, more so than I've ever seen, I don't think we're going to see premiums come down. In fact, if I had to guess, we see them exacerbate. It remains to be seen what happens at the end of June with the new margin requirements for Basel III and the London Metals Exchange. Does that really start to set free gold and silver? Does it allow for a more accurate price discovery? That remains to be seen. But what I really think is going to tilt the table on the side of inflation is when big money starts to come out of these assets. And, when they start to come out of the stocks and they start to come out of cryptocurrencies and they start to come out of bonds after riding a huge crest of a bull market, where do they go? There are no places to safely put your money anymore. You can't put it into cash when you see money creation run into what it's at, with inflation running by their own admission almost at 4% and the yield on the 10-year treasury almost 2.5% below that. No one's going to buy treasuries. And so when you look at where to put your money, fixed income, no. Stocks at all-time highs. Cryptocurrencies at all-time highs. I'd like to make a point about the cryptocurrency market too. The Justice Department is now giving the IRS the go-ahead to audit, I believe it was Binance and Kraken. I've also received word that the IRS is going to mandate a Form 8300 moving forward. I don't know exactly when this gets implemented. Maybe it already has, but I just heard it. Form 8300 on crypto sales. And for those of you that don't know what the Form 8300 is, if you were to take your family and go to Macy's and buy for your entire extended family a wardrobe for the next 2 years, and the minute you get over $10,000 in cash, $100 bills, you fill out a Form 8300. They'll give you one. Go buy a new F-150 with over 10 grand in cash, Form 8300. Buy precious metals with over 10 grand in cash or money orders, multiple, Form 8300. So there are reasons, if there is a little window here, where you'll see people, I think, try to escape with some anonymity, on top of the fact that you have an administration talking about doubling capital gains. If that doesn't incentivize people to leave stocks at all-time highs, because profit's not a four-letter word, to leave bonds at all-time highs, because profit's not a four-letter word, or cryptos or real estate. These are times when I think people will be incentivized to get money out of these assets. And it's those assets where all the inflation has been harboring safely. What happens when that money comes out searching for another safe haven? Well, there really aren't any, in my opinion, that aren't really at their all-time highs or arguably overvalued, with the exception, really, of silver. Now, you could say the same thing about gold. It should be higher than it is, but heck, we're only $150 away from its all-time high, 8%. But with silver, you got almost a double in there. And when you see the amount of deliveries coming off of COMEX, it's extraordinary. The biggest money in the world, done again, is taking money off of COMEX, and they've been doing it. We've been talking about this a lot, you and I, since 2020. It was interesting to me in 2020. Now it's very illuminating. I mean, bottom line, you're seeing the most sophisticated private investors in the world take huge amounts off of COMEX. you put it all together, and I think you see a pattern where big money is de-dollarizing, and where there are many, many potentials to open the floodgates to some of these inflated assets in search of, or leaving these assets in search of a safe place to put it. So when I look at what I think we'll see over the second half of the year, I think we'll see higher premiums. I think we'll see rising prices. I don't think it'll be any easier to get product. And I think you'll see price inflation in this industry really accentuated, maybe the way that we're seeing it in many of the other economies, the other commodities as well. So I don't mean to be pessimistic, but I am not optimistic that things revert to some semblance of normality as it pertains to availability, as it pertains to premiums, and as it pertains to inflation across the whole complex. I think we're going to start to see some real inflation, and especially if people start coming out of these assets in search of where to put their money. So that's what gold and silver is for. It's to protect us in these times, whether it's inflation or the greatest depression of all time. I think you need to have gold and silver. We know what it does in inflation, and in deflation, it's no one else's liability. So buy precious metals now while you still can, before you see a much greater expansion into the mainstream. We're already expanding more so than any time I've seen in my 30-year career. What happens if that number doubles from roughly 2% allocation to 4%, or quadruples to 8%, where we were in 1980? Or how about just a normal allocation of 10%? That's a 5-fold increase from here, and basically a 20-fold increase from 2020. This market can't handle it. And that's what we're seeing right now. We're seeing price inflation in a market that can't handle it, rising premiums characterized by more money chasing it. And so it's a full-time job done again, and it's not getting any easier, no matter what naysayers say. I will tell you, it is not getting any easier. It's a full-time job, and I expect it to continue throughout the rest of the year.
You mentioned asset classes that are at all-time highs, and in the first go-round on that, you didn't mention real estate. You did later when you talked about that. I wanted to underscore that because in the last week since we spoke, I've had 3 clients who've called me and said, we just sold a home. We're not comfortable leaving the proceeds sitting in the bank where we normally would, in a savings account. We want to get this into silver right away, or into gold or silver. And it's like, that's not, just think about it in general. You haven't heard people saying that for the past decade. It's like, I'm not comfortable. I just sold a house. I got to get this money into metal right away because I'm not comfortable leaving it in the bank. I don't trust the banking system. To me, that was like, it's interesting.
It is interesting. I've never heard that. And that's what I mean by the proliferation into the economy, to the real economy, into the mainstream. More and more people are concerned. And sometimes in life you feel off. You can't really describe what it is. You just feel off. And I think that's what's happening to a lot of people out there. And a lot of it has to do with the fact that you see these markets that they've been invested in for a long time at their all-time highs, and their eyes say, how can that be? My friends are out of jobs. There's still, I don't know how many, 10 million people unemployed. I don't know, maybe more than that. They see an economy that's been eviscerated and it doesn't calculate. And so there are people that are concerned. I mean, you see houses that are selling for, tens of thousands of dollars over list price and selling like that. And the people who are living there saying, my gosh, how the heck did that happen? And they look around at where to put their money. And you don't have to be a hard asset person to feel this and to understand it. And so I think that the people are transitioning. The more things change in life, the more they stay the same. And everything is a cycle. And there once was a time in 1980 when no one wanted traditional stocks, U.S. stocks or bonds. They wanted precious metals. And, maybe we'll see that time again where we see hard assets, where we see people just had it with paper investments. Look at the Japanese Nikkei. And when I started in this industry in 1989, 90, it was approaching 40,000. And they owned Rockefeller Center and Pebble Beach and casinos in Vegas and ski resorts in Colorado. And they made anything with an engine or electronic components better than we did. They were taking over the world. And here we are 30 years later with interest rates at or near zero the whole time. And their Nikkei is not even about half of what it was back then. I haven't looked at it lately, but half, 2/3. It's still well below the all-time high. And I guess the lesson to be learned there is that when people really get burned badly, it takes a whole generation just to get them back in, because people's memory, and if it's as bad as I think it could be, when you're talking about all-time highs in these assets and all-time high money creation and unemployment you haven't seen since the Great Depression and interest rates at the lowest in human history, all of these things that are put together, it ought to, when it corrects, manifest itself into one hell of a correction. And I think when that happens, it will scar people. Earlier last year, the market fell by 40%. In a couple of days, it came back. And it came back courtesy of the Fed. But what happens if it doesn't come back? And what happens if it really takes a sustained downturn for a good long time? I think you'll see a whole generation of people just forsake these types of investments. And where do you go? Where do you go when your own government is inflating away your currency with money creation running at 75% year over year? That's not going to manifest into 75% inflation, but what if it turns into 10%? Like John Williams says it's at right now, 11, he says. What if it's 12 or 13 or 15? I don't know. I guess these are the things that I think about when I look forward. And this is why when I say gold and silver are not investments, they're wealth. And they're wealth in times of uncertainty that have lived through every hyperinflation, or German hyperinflation anyway, for sure, the Great Depression, every pandemic, 2 world wars. It's historical wealth. And that's the way people need to look at this right now. I'm not trying to tell people to invest in gold and silver and scare them into doing it. I'm just simply saying that if you want real wealth, that is one of the only assets on the planet that isn't at all-time highs. And the biggest money in the world has been quietly accumulating the heck out of it. And more so now than ever off of COMEX over the last 4 years. That to me crystallizes my belief. When the big money quietly moves, regardless of what the rhetoric is, you can see it by the delivery numbers. It's very illuminating. And I think that's what people need to pay attention to. The biggest money is quietly repositioning. They are misdirecting the public, and they are quietly repositioning without trying to get crowded out of the trade. They're not going to talk about it. But once they are comfortably sitting on that deck chair, then they'll talk about it and they'll let it run. But by then you won't be able to find it. And that is my biggest concern in 2021 is the second half of the year bringing difficulty getting product, much like we've seen in the beginning parts of this year, but I see a trend only getting worse.
In addition to the people who, like I mentioned, have sold real estate, and we also had a number more calls from people who are selling cryptocurrencies and rolling that into precious metals. But there's a third category, and that's people who have they've worked very hard for very long. They built up a IRA or 401k or a 403b, and now they're retirement age or close to it, and they're really concerned because the investment choices are very limited that they have access to. They can either choose stocks, bonds, or a few mutual funds and ETFs. That's it. And just as when we were at the Red Pill Expo, we heard Robert Kiyosaki from Rich Dad Poor Dad up on the main stage talking about, he said, this is what we've always been told, we'll get a well-diversified portfolio, work hard, get a college degree, and get stocks, bonds, mutual funds, and ETFs. So this is the dominant story that everybody is told. 60-40 portfolio with bonds and stocks, and Michael Pinto says people who stick with the 60-40 stocks bonds ratio are just going to get wiped out, because when those asset classes, which are now correlated together rather than supporting, diversifying against the other, provide no diversification really between those two. And so that's another population of people who are reaching out and saying, what can I do to protect? I don't want my nest egg that I've worked so hard to build subject to potential collapse of the equity markets and the bond market. So one thing that they're keenly interested in is it really true that if they opened a precious metals Roth IRA and they go ahead and take their hit now at the current income tax level and pay their taxes on that money that's never been taxed and move it over into a Roth IRA as tax contributions, that they could then future capital gains, if they get multiple expansions in nominal valuations on gold or silver, would be not subject to this potentially increasing capital gains tax rates we've been hearing about. Does that sound, no, we're not tax advisors, but is that square with what you've been told?
100% it is. I mean, I don't think you need to be a tax advisor to say that that's true. The whole premise of the Roth is the government gets their whole lunch all at once instead of little snacks. And you get, for doing that, you get to ride out the gain from that point forward, free from any future taxation. I think it's really actually very smart because, they're going to raise taxes. There's no question about it. And I think you'll see rising taxes coupled with rising prices in precious metals, a la monetary inflation. It's coming. Everything's going to go higher, as are the taxes. So why not bite the bullet now before taxes rise and before the price of the metals rise? So yeah, I think whether you own a physical precious metals IRA or any IRA, you could make the argument, depending upon how old you are, that converting to a Roth right now, it really isn't a bad idea, especially in the scenario that you just spoke of, especially for people who are nearing the distribution age, the retirement age, 59 and a half, because you can convert your traditional IRA into a Roth IRA, pay the taxes, fill it up with gold and silver, let it run, and whenever you want, start taking distributions in kind. Have the custodian and the depository send you your metal as a form of a distribution in kind, but you can just let it ride in the depository as long as you want until it's time to take possession, and there will be no taxes. It's actually a very, very good idea. How it all plays out is, I guess, subjective, but looking at the facts, higher prices and higher taxes, you couldn't ask for a better environment for a Roth. And I just want to underscore one more thing. I can't help but think, in all the things that we've been talking about with stocks and bonds, this cryptocurrency thing, it's so anti-establishment. I own a little bit. I'm not a big crypto guy. I own some. But I'll tell you, the people who I talk to about it, I'm on a few other podcasts, and they're voracious. They're venomous about it. It's everything. And it's also very anti-establishment. And I think that it's catching the eye of the establishment. When you see the Justice Department say, we can go ahead and audit Kraken and Binance, when you see Form 8300 on sale of cryptocurrencies, they are trying to close the loopholes. And so for those of you out there that own cryptocurrencies, my biggest advice to you is do not mess with the IRS. Do not switch in between cryptocurrencies and not pay capital gains. When you switch from Bitcoin to Ethereum, that is a taxable event. That is from apples to oranges. And the thing of it is that when you talk about exiting cryptocurrencies, a company like ours and many of the companies out there, we take Bitcoin in order to facilitate a transaction. And the only reason that all of us take Bitcoin and nothing else is because we can hedge it on COMEX. So if we take it take it enough for 5 ounces of silver, and by the end of the call, it's lost half of its value or doubled in value. You can't do that with a business like this. You can't be speculative like that. You have to have a stable form of payment. So because it's hedgeable, we will put it on, take orders on it, as will a lot of precious metals. We can hedge our exposure on COMEX. But you see, the thing of it is that all these other cryptocurrencies you can't do that with. But first you have to convert it to Bitcoin. And when you convert from a stable coin or from any type of cryptocurrency, anyone, and that's a taxable event. And I keep talking to people who think that that's private and they don't have to report it. Well, now you're seeing the exchanges get audited, and now you're seeing Form 8300. And Form 8300, there's no way out of it. And if we have to start taking, and all the retailers have to start filling out Form 8300s when people send more than $10,000 in cryptocurrency, watch out, because now you've just you put your thumbprint right there on the glass door, and they'll find you. And I want people to keep that in mind, because all I keep hearing about lately from my inside sources is that they're really, really trying to clamp down on this loophole, if you will, of anonymity. And I don't think the establishment likes that very much.
The other thing, when you were talking before about the expansion, people might not realize what you were talking about expansion earlier. I think you're talking about expansion of the population that has a awareness of the importance of sound money, rather than all of us just blindly just thinking that dollars and a bank account is what we do, realizing that there are risks there that people are now they're waking up to. So you've got this expansion of the percentage of the population that is thinking, wait a minute, I need to be outside that system for the safety of my family. That's what our whole channel has been about, is awareness and preparedness. They want to be aware of real risk to their family's financial future. So in that light, we've had more people, some of these people who've sold a home now reaching back out to me and said, hey, remember I talked to you a few weeks ago? I was going to sell my home. Well, I did. So now can you sell me those, fill in the blank, products that we talked about? Just about an hour ago, I had to give the guy a bad news. Yep, those were available. They're all gone. Increased prices, increased premiums, and difficulty obtaining product. And you talked about it from your point in the supply chain, but that's what I was trying to communicate, how that affects the ordinary individual, is that don't think that it won't matter to what's available. It will matter to what's available if more and more people wake up and they go after, rolling their savings or their retirement or their home sale proceeds over into metals. The availability of metal to satisfy that. I had a guy just tell me he's hedging on COMEX, the spot price. So he's not concerned about spot price increase. I said, wow, that's really forward thinking of you to be hedging the spot price. But if I have nothing to sell you, I have nothing to sell you. So that's just the thing to remind people, that there's a real risk of availability going forward.
Well, Steve St. Angelo published a graph the other day that was really, I don't know, it was shocking actually, and it showed silver price going back 20 years in a chart where part of the chart, the majority of the chart, was industrial, and the tip was investment as it pertains to silver. Roughly, most of my career was 80-20, 80% industrial, 20% investment. And you know how busy we've been done again over the last year and a half, how crazy people have been for silver. Gold, you're not seeing that anxiety yet that we see with silver. And it was really interesting. If you look at his chart, 2020, 2021, it's like it's been inverted. And the level of investment demand is greater than the industrial demand, which I find really difficult to believe. But let me put it to you this way. From where I sit, I don't, but from what I know, I do, in the respect that, mostly silver's uses are mostly industrial. But all of a sudden, there's been an awakening globally. Maybe it's the 80,000 new people who've signed up to Wall Street Silver. Maybe it's more people listening to you or to Bix or to Rick Rule or to all the people out there who have been saying this forever. Maybe there's something pushing people just to listen a little bit right now. But when you see that flip-flopping, where there's a massive spike in investment demand in silver, massive spike, that is what, I think will push things over the edge. And then, as I keep saying over and over and over again, the industrial aspects are only increasing too. The Belt Road and Rail Initiative, connecting 70% of human population, the need for silver is extraordinary. And also a green new agenda and the batteries and away from fossil fuels. If we ever see something really substantive out of the administration from that, silver offers so many possibilities and it's priced so incorrectly that I just think it's one of these deals where it's the buying opportunity of a generation. And I say that hand to heart. I mean, I think it's the buying opportunity of a generation. I truly, truly do. And when we tried to talk about price discovery, I mean, you can't find anything for under $4.50 to $5 over the price of silver. So what is the real price? And where does it go from here? Look, everyone out there should know there are 6 major mints: U.S., Canada, Austria, Australia, South Africa, United Kingdom. And when those mints run into problems, it's game over. And you can see a semblance of that with what's happened with the U.S. mint products. More or less, they've been, for the first time in my career, they were issuing rationing allocations the second week of January in Eagles and Buffaloes, gold. Never seen that before, maybe in November, but 2 weeks into the new year, we're already seeing that. And here we are now in May, where arguably since mid-April, they haven't produced anything. And they were retooling for this new type 2, which we just are now able to take orders on that come out in the first week in July. But you can see what happens when they run out of product or don't produce, the premiums go to the moon. Well, I would say to you, that's exactly what's going to happen if we see more problems broadly. Perth Mint or UK Mint or any of these other centers of source of product, they're struggling to keep up. And if they slow down even, that's what happens to the premiums. They go straight up. Doesn't take much. And a lot of us take things for granted in life in general. You take things for granted. I watched a movie the other night about a guy who lost his hearing. He was a drummer. Awesome movie. And when it happens, you think for a moment, geez, you take little things like hearing for granted. Well, I think in general, people reflect and say, geez, I maybe took that for granted. Well, I think anyone out there very succinctly, I think, could very quickly take for granted how the ability to protect yourselves. And I think that's becoming harder and harder to do. It truly is. And I know I sound like a broken record, but when I look at the things that I try to focus on, to me, they're the only things to me that matter. It doesn't mean that that's not the only thing that matters. But to me, if you can't get it, what does anything else matter? And so I think that's where, you look at the U.S. Mint, that's a microcosm of what I expect to see moving forward, where premiums go to the moon because there's too much demand and not enough supply and inefficiency in the centers of distribution. So I guess that all remains to be seen, done again, but it all is centered to adding precious metals as wealth, not as an investment, and realizing the importance of protecting yourself while you still can.
There's two quick thoughts that occurred to me before I'll ask you about our weekly special. They're related to everything you just said, and that is we've had people calling us who really they're ready, they want to protect themselves into some sound money. Some of them have a lot of experience. They've been acquiring for years, or at least a decade, and they'll say, I've got a rule, I don't ever pay more than 8% over spot price for silver, for example. And we go, that's not this market. I got nothing. There's literally nothing other than 1,000-ounce COMEX bars that I could sell you that meet that parameter. So no, I buy 1 ounce to 10-ounce products, and I do it less than 8%. So what? And sometimes they're really annoyed that we don't have anything to fit into those parameters, because those parameters served them well over the past decade as they were looking for value, that kind of thing. But when the game changes and the landscape changes and the whole supply-demand dynamics change, you can't always apply the old rules, or they won't serve you if you really want to be able to get done what you got to get done. That's one thing that occurred. The other thing was people calling about concerned about where's my tracking information on order follow-up. I was running down about a half a dozen of those today. Every single one of them was a paid by check, which again, we have to wait for the postal service to deliver the check. Then we deposit the check. Then we wait 7 business days, which is 9 to 11 calendar days, depending how many weekends you pick up. So all of that. And then you have the packaging and shipping queue, which is normally 1 to 2 days, but now it's 3 to 5 days because that many orders are ahead of us. And I looked at the people that paid by wire, no calls as far as it just gets it done. So anyway, just observing that in times of crowding, and you said the big boys don't want to be crowded out of their trade. Even the little guys don't like to be crowded out of their order, making it through the process. Just the people who are recognizing the changed landscape and are still getting done what they got to get done, and they're figuring out how to get it settled as quickly as possible, gets it to them, gets the whole thing consummated much more punctual. That leaves them hanging much less.
A wire is always going to be your best way. We've been hearing stories since 2020 of checks taking 1 to 2 weeks. Always. I mean, we keep hearing it over and over and over again. You have inefficiency in the post office to begin with, and then you have social distancing and COVID and all that kind of stuff, which just makes it that much more difficult. If expediency is something that you're interested in, a wire is always the best way. And for those people paying in Bitcoin, we'll ship it the same day very often. We have been lately. It comes just like that, and it's settled, and or the next day. But I guess it's not imperative. You'll get your product as long as you don't mind waiting for the clearing time. But I guess if we had our druthers, we would prefer a quick turnaround. But a lot of people just don't want to go into the bank and send a wire. So they write a check or do an ACH, and that's going to take some clearing time. But sending a paper check, if you're going to do it, at least send it by FedEx or express mail, and that will really expedite the process considerably. And you can also track it too, know when your check was received, and have a good idea as to where you are in the time frame waiting for that to clear. And clearing funds in this crazy world we live in has to be done. For every honest, great guy like you, done again, there's 6 that aren't. And I've realized that the hard way. And I hate to say that because most of our clients are awesome. But one bad apple can make you real quick realize what the heck was I doing and not letting that clear because, there's a lot of identity theft and consumer fraud out there. So if you're going to send a check, expedite it by sending it by FedEx, and it will save what could be week, 2-3 weeks, depending upon how long it takes for the regular mail. And I've seen the whole gamut running as long as 2 or 3 weeks for the last year now.
Well, I've got that beat. We have a gentleman in southern Texas who sent us a check about 4 months ago, and it was when that rush happened in January when we were both in Florida, and we never did receive it. And he was just sent through regular postal mail. So sometimes the regular postal mail, if it's not tracked, really you can have things go into a black hole. All right, enough of that. How about the weekly special so we can get everyone informed and let you go?
Yeah, I really try hard to give us something to offer your listeners, who I'm so appreciative to have a small part with, and all of our clients, something that we can offer where we really shave down what we're making and offer something special. Because it wouldn't be special if it wasn't price special. There are a couple things that we have that we're very happy to offer. One would be, I think we still have live somewhere around 10,000 Krugerrands with 15 or 20, maybe even more thousand due in next week. And we can offer those to your listeners at $5.25 in any quantity. We also have mother and baby platypus. They had a very low mintage. I want to say 75,000 is the only, is all that was made. And they come in boxes of 100 coins, 200 ounces to a sealed mint box. They're really neat. I had the 2020s, mother and baby crocodile and mother and baby something else I don't remember, but they're very small boxes and they're great. And there's 200 ounces per box. I believe we have 3,500 ounces left of those, or 3,500 coins, left of those. And those are $5.75 over the price of silver per ounce. And you know what? Those numbers kind of underscoring everything we talked about. Those numbers would be 3 times higher premium-wise than anything I've seen in 30 years, yet it's the best price in the country, or as good as you'll find as far as I can tell. And we make less money on that than other products. That's where we are in the cycle. And I guess it's anyone's guess to see where it goes from here. Does it continue like I believe? Or does something happen, a magic bullet where things just go back to normal and you're buying Silver Eagles at, $2.89 over spot instead of 12.5 or 13 over spot, and you're buying Gold Eagles at 3% over spot instead of 10 or 11% over. So this is where we are right now, and I promise you, I do a lot of work trying to make sure that we get the best stuff at the best price for the listeners, and I love both of these. In particular, those 2-ounce coins, because it's just neat to have a sealed mint box about this big that has 200 ounces in it. You won't find anything like that. Most mint boxes are 500. The Kangaroos are 250, and they're the only mini mint box out there. So typically, if you want a sealed box from a mint, you got to buy 500 ounces. Here's, 2.5 times that. So it's, or less than that, rather. I think it's a real good choice.
Yeah, that's one of the things I was going to mention when you mentioned that special, was because we've often had, when we run specials, people asking, can we get a mini monster box? Because the one tube might not be enough and a whole monster box might be more than what they were going to bite off and chew. Yes, now we can. Now with these 2-ounce platypus, mother and baby 2-ounce coins, if you put 100 of those 2-ounce coins, the Perth Mint puts those in a 200-ounce monster box, mini monster box. So we have those, and they're in very limited supply. So
they're gratifying too when you look at them. They're so much thicker than a normal coin. somewhat gratifying to look at. I would like to bring up one last thing, and I'll let you run. And that's something you said to me last night when we were chatting by text. We were talking about the kangaroos and how I had said they were roughly a week out. We're doing so much volume that the next week's shipment gets sold out before the shipment even comes in. And that's what this entire industry is doing right now. And that, here again, emblematic of what I'm saying. We have 35 or 40,000 kangaroos, I tell you, are a week away. And by the time the week comes, it says now they're 2 weeks away. Well, how did that happen? It's because the 35 or 40,000 were sold. And all of a sudden, now you have to say to people, yes, I've already purchased them, but they're now 2 weeks out. This is the name of the game. You're going to see more and more delays, higher and higher premiums. And this is why you want to strike while the iron is hot. You want to get it while it's available. And don't take my word for it. Look around. Look at all the out of stock things. Look at all the pre-sale things. Everyone is experiencing the same thing. We're all buying from the same places. And I guess it is somewhat of a race unless you believe things are going to get better before perhaps they get a little bit more tilted. And I'm of the opinion that things get a little more tilted before they get better. Now, I'm not saying that, the end of the United States or it's over, or, we're going into a depression or hyperinflation or immediately. But what I am saying is that the numbers don't lie and the trends don't lie. And I think we're heading into a place where you better be protected. You better have something outside the dollar. You better have some precious metals. You better have food and water and shelter and all of that stuff in order and prepared. And like you were saying earlier, if one thing that 2020 taught me is that, anything can happen, anything. The fact that I'm sitting here in Florida right now in a new home is testament to that. I was so deeply cemented to the state of Minnesota, where I've spent 50 years of my life and all my friends and all my family and everything I've ever known. And the fact that I picked up and left is so unlike me, I can't even tell you. But that is just how I look at the world right now. Everything's in flux. Everything is fluid. Everything's changing. And sometimes even the best laid plans need to be reevaluated. And I think that's where we are right now, Dunnigan. And just am so thankful to be associated with you and your family. And we'll ride this out together. So for everyone out there, stay safe, be well, God bless. And I'll look forward to picking up with you next Tuesday. And we'll see what the world has in store for us then.
Thanks, Andy. And remember, everyone, if you want to make sure you don't miss out on a single episode with Andy or any of our guests, make sure you go to our homepage, libertyandfinance.com, put your name and email address in the left-hand side, click subscribe. You'll get on our email mailing list, and that gets you our newsletter 3 times a week at least, all free, gives you all of our guests and all of our interviews in there. We've been talking with Andy Schectman, CEO of Miles Franklin Precious Metals. Andy, thanks for this market update.
Thanks, Dunnigan. You stay well. Talk to you soon.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded. For physical delivery, vault storage, or precious metals IRAs, excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.